Um, Thank you for coming tonight. So this is part of our wellness initiative. Residents have asked specifically on certain topics to kind of get them ready for the real world. We know that you're studying very hard, and unfortunately, you don't get some training in terms of how to take care of certain things. And there's lots of stuff that you need to know. So tonight we're going to talk specifically about insurances and things that you need to know to protect yourself. You work very hard at your career, but it's time that you need to start worrying about protecting your investments, i.e. yourself. So tonight we're going to have three distinguished speakers here. Jeremy Cohen, who works with Levi and Associates, and Jeremy is where he focuses on employee benefits, health insurance. We, as you know, with the Medical Society, we get our insurance through them, and they've actually done a very superior job in giving us, fairly decent rates in terms of running our practices. He's a Florida product and went to the University of Florida. Yay. So Tom does professional liability, workers' comp, experience in risk management as well. So those are very important things. And also he does malpractice claim studies. And Matt Gracey with Gracey Backer, they also provide malpractice insurance is very important. And, so these subjects are things that we really have to worry about. So who's going to start first? This program is recorded.
I'm going to go first. Mindy, do you want to put my slides up?
Can everybody see the slides? Okay.
Yep. All right, so the first couple slides we'll go through quickly. Again, the agency I work for is Levi and Associates. Next slide. Quick agenda for us today, brief about who we are and what we do, and then the two big topics of discussion will be life insurance and disability insurance, and then there'll be questions time at the end. However, if you have a question, you can put it in the chat box. I'm keeping an eye on it as we go through, and I'll try and answer them as we go along. Next slide. Real fast, this is who I am. Born and raised in South Florida, been in the business quite a while now. Went to University of Florida, then Barry for grad school. Married with 2 kids. Been drinking a lot of bourbon these days with my free time. Okay, next slide. So a little bit about Levi and Associates. We've been around for quite a while now in Boca Raton since 1993. My department focuses on insurance for the person. So that's health insurance and life insurance and disability insurance. Those are the things, dental and vision and all those kinds of things. That's what my office, my department specializes in. Okay, next slide. We have a big team. There's about 22 of us now. We're broken down into different departments. Okay, keep going. All right, so let's get into the meat of my part. Life insurance. Life insurance, as you can see here, the definition, it's a contract between you and a company that says so long as you pay your premiums, if you die while you have a policy, they pay a amount of money. The big reasons why people buy life insurance: to replace income for your family, to leave money for final expenses, to leave money for an inheritance for the next generation. People buy life insurance sometimes to make protection for a mortgage if they buy a very large house, to buy out a business or a business partner, or to make a charitable contribution. The considerations for pricing, there's a bunch of them. Age, health and medical history, gender. Unfortunately, men are more expensive at the same age and same health as women. It asks about your behavior. So things like, do you smoke? Do you have risky types of adventure type, skydiving, deep sea, scuba diving, racing motorcycles or boats or anything like that? And then they ask about your net worth. You can't be worth $1 million and buy $100 million of life insurance. There is a formula. Usually no one gets there, but they do ask about your net worth as well. Next slide. This is an important one. There's two kinds of life insurance. There's term insurance that's basically defined as if you die, and there's permanent insurance that's basically defined as when you die, and they're different. If you die, or term insurance says you pick out a period of time at the onset of the plan, and from that point, whether it's 10 years or whatever, you pay premium, and the day after that period of time, it goes away. In exchange, the pricing is most affordable. Most people your age, my age, small children, growing, buy term insurance because of the cost and the need for the large face amount. Permanent insurance is when you die. It never goes away. There's residual value. Most of the time it builds cash value. Generally, these are for people more established. They are generally smaller face amounts, and they're designed for things generally differently than the term insurance. Next slide. So here are some facts. There's a large percentage of the population that does not have life insurance. 40% of people think they don't have enough for those who have. If you followed the cost of insurance, life insurance is at an all-time low today. The reason is people are living longer, we're living healthier, we're behaving better, and therefore rates are going down. Most people think the cost of insurance is more than it actually is. Then if you see at the bottom, most people today are still using an agent before buying a policy. They're not just going straight to the internet and buying it online. Next slide. So here's a graph. It shows you the needs of life insurance. And as you see, when you're very, very young, you don't have a lot of debt, you don't have a lot of people worrying about you, don't need a lot of life insurance. As you age and as you grow a family and invest in a business and get into your peak earning years, your needs grow. And then as your assets grow, your need for life insurance to offset those assets decline. And that's the general timeline of the life insurance needs. Any questions on life insurance so far? Pretty straightforward. Okay, next question. Next slide, I'm sorry. Disability insurance. Where life insurance is for your family in the event that you pass, disability insurance is for you. It provides you protection against income that is lost as a result of an accident or illness. Things on here that pricing considers, some of it is very similar to life insurance. Here, women are more expensive than men. They go to the doctor, they listen, they're more likely to take time off, not ignore a pain or a doctor recommendation. Us men don't do as good a job listening as women do. One big, very important thing about disability insurance when building a policy for you residents is a rider called the own occupation. It's often shortened to own-oc rider. This means that if you have it and you decide to be a surgeon and your illness or injury does not allow you to continue doing surgery, you can be a doctor, you can be a teacher, you can be anything, but if you can't be your specific subspecialty, then you would earn your disability benefit. regardless of whether you can go out and get another job if you lost income in your specific occupation. Now, this is something that if you get into a subspecialty is very, very important. Next slide. Okay, now this graph is a little difficult to understand, but it is a pie chart that shows the reasons people go on disability. Many people believe it's a result of getting into a car accident, or tripping and falling and breaking a leg, or falling while skiing. And you'll see that only about a quarter of the time does that occur. All the rest of these are cancer is a big one. Illness is a big one. Mental illness is a big one. For ladies, complications related to pregnancy and childbirth is a big one. So it's not just you got hit by a car on the way to work or you fell while skiing. There are many other reasons that people go on disability claims. Next slide. Okay, so there are other ways of getting disability other than a personal plan. You'll see there's Social Security disability, there's proceeds from workers' comp insurance, there's certain states have disability programs, although Florida is not one of those. Most of the time it comes from an employer-sponsored plan. A benefit offered like health insurance, and next to it would be disability. We do this for our clients a lot. This would cover usually up to 60% of your salary. It can be considered short-term or long-term. Personal plans are only going to be long-term. There is no short-term disability or STD available short-term. There is products available through Aflac that smell and look like it, not exactly the same, but personal plans, people buy long-term disability. Long-term means starts after the 90th day and takes you generally to your retirement age. Next slide. Okay, so as I mentioned before, disability insurance is for you. 1 out of 4 people will have an illness or injury that keeps them out of work for at least 1 year. And the average length is almost 3 years. So for residents, for you guys who are just working through and just about to start earning a lot of money, where you have debt to pay off and a family and maybe buying a business and all these things, can you afford to go 3 years with no income? And if you can, this is what disability insurance would do for you. Now, I mentioned before that there are other ways of getting disability. However, most of the time, the disability does not occur at work, which means workers' comp and some of those other plans would not protect you because it does not happen at work. And this last bullet here says that almost half of foreclosures on conventional mortgages are caused by medical bills that are built up that caused by a disability. And if you had disability insurance, you would have income to offset that and hopefully not be thrown out of your house. Next slide. So here are 2 charts. The chart on the top shows the odds of disability versus death based on age. So for 27-year-olds, you are almost 3 times as likely to have an injury or illness as opposed to premature death. And you will see that 42-year-olds, it's 3.5 times. Then it starts to go down. This chart is just to show you guys that many people believe life insurance is very important. However, for you, the income earner, disability insurance is much more likely to be needed. Then at the bottom, as I mentioned, here's the average duration of disability based on age. And I said to you before, it's almost 3 years if you take this whole thing as an average. Next slide. Okay, so medical residents. You guys are special. And although you are not earning enough income to qualify, almost every single major carrier wants your business. And they will be offering you guys things you get just for being a medical resident. So this is Northwestern Mutual, a major A-rated carrier. And what it says here, though, is for residents and fellows, you guys can qualify for $6,000 or $7,000 or $8,000 a month of benefit, regardless of your income today. Now, the categories you see on the bottom are based on the subspecialty, but they're saying to you that they know you're going to make a lot of money and you are able to lock in a huge benefit today based on your today's age, even though you don't have the earnings to justify it. So that's a great benefit. Many residents take this up, buy their first policy when they're very, very young. Maybe Dr. Baca at the end can describe when he got his first policy, but generally many residents take advantage of this because it is such a great opportunity. Next slide. Okay, here's a little back of napkin exercise to think about. Pretend you are going to buy yourself an ATM machine. Just like when you guys begin earning your very large salaries, you'll be making boatloads of cash. So we turned you into an ATM machine. ATM machine on the left, or number one, says it will earn you $300,000 a year or $25,000 per month. However, no insurance on the ATM. And if anything happens, breaks or dies, you get nothing. Or you can buy ATM number two. Generates the same 300,000. However, you're only going to take home 24.4 thousand per month. And instead, you're going to spend $600 on insurance. And if it breaks, instead of getting 24,000, you'll get 10,000. And if it dies, you get $1 million. Now, I do this in plain English to illustrate how valuable disability insurance and life insurance can be in the event that you go start making boatloads of money. You need to protect that major asset that is your ability to earn for you and your family. Okay, next slide. Any questions? I know I go through this pretty quickly. There's a lot of information here, but does anybody have any questions about types of insurance or what they may need or anything like that? Okay, great. So that's all I have for today. Again, here's my contact information. If anybody wants to ask personal questions at the end or reach out to me afterwards, please feel free to do so. Now I'm going to turn it on to the gentleman at Gracey, Danna Gracey. Is it Tom? You're going first?
No, Jeremy, I'm going to go.
That's going first. Okay.
Right.
Matt Gracey, everyone.
Thanks so much, Jeremy. That was a great presentation, very informative, and thanks again. So yeah, just to get a few things right, Tom and I are with Danna Gracey, not another agency that has a similar name. We are mostly malpractice insurance agents, but we do offer a full line of insurance coverage for doctors. And we are very proud to be one of the longest time sponsors and experts in the Palm Beach County Medical Society, as well as a number of other societies around the state. What we are known for is creating programs, purchasing programs for societies to really drive the cost of your insurance down to much more favorable rates. And we've done that for many, many years. So we have a lot of connections and a lot of knowledge. So I'm going to go through the malpractice side of it. and then Tom's going to jump in and take on some of the other coverages that are very important that you want to have at least a fundamental understanding of. So Mindy, next slide, please. Next slide. So this presentation comes under a wellness category. I'm not sure that this slide is really promoting wellness because what we're saying here is that the market for malpractice insurance is deteriorating quickly. Malpractice insurance is really based on two pricing points. It's based on the severity of claims against doctors in any specific venues. And the other thing is the frequency of claims against doctors. Both of these have been going up for the last 5 years, and we are in a quickly what we call hardening market, meaning that the underwriters are getting much stricter, and prices, of course, are going up and so forth. You can see we're even experiencing 15 to 20% rate increases for some larger groups. Actually, we've seen doubling and even some tripling of prices for larger groups that have had very bad claims experience. We're also seeing doctors non-renewed for frequent claims experience as we come into this more difficult market. So from your perspective as a resident, you need to understand that this is a very important factor to consider as you're either going to hang a shingle to start your own practice, or as you are joining a bigger group. Some groups are stellar. Their rates are fairly stable, going up 3, 4, 5% a year instead of 15, 20, or 50 and 100% as we're entering this market. So you really need to know what the profile is of your group if you're joining a group. Of course, as a resident, you come out with a clean slate, and you get deep discounts the first 2, sometimes 3 years, depending on the company. And you'll be very surprised, frankly, at how cheap the coverage can be in those first years because you get a new to practice discount. As you start to practice more, you'll accumulate, hopefully, more credits, and the pricing will be kept somewhat under control. But again, a lot of factors will vary or will make the rates vary. Next slide, please. So one of the things that we always say is just make sure you have an expert on your side. If you're joining a group, talk to a malpractice insurance expert about what the negotiating factors are in your contract. Lawyers, I have to tell you, don't really understand malpractice insurance. They don't understand some of the factors that are very important to you, like tails. Just if you're taking notes, put check on tail price and who is going to have to buy a tail price should you leave or be terminated from a group that you join. And even if you're hanging your own shingle, you want to know about tail pricing and so forth. It's one of those surprise factors that we and any other expert can help you with. Next slide, please. So here's one of the other issues. We're really, headed into this very strange, not headed into, we're now obviously involved in a pandemic, and pandemics tend to, or seem now to create a bunch of different factors in the malpractice world than any of us have really seen before. The problem is this pandemic has come upon us right at a time when all the companies in our marketplace are losing money due to claims that have become much worse for doctors in Florida and frankly everywhere around the country. So these are two factors combining that are making a very bad storm in this market. Next slide, please. Lawsuits are really the major factor when you get in front of a jury, is that the jury is going to have to decide, did you really practice in the standard of care that your peers would expect you to practice in. And right now, we don't really know what some of those standards of care are, given the pandemic environment. We also have layers of all these distrust factors that, frankly, I don't want to go all that deep into. We all know what's going on in the world at the moment, and it is really at a point where we're seeing many more lawsuits being talked about. Again, one of the issues right now is our court systems are almost shut down. They're, of course,
Matt, you're frozen.
And Tom can talk about a little bit about that with some of the other coverages from not just from patients, but from employees and a number of other players. Next slide, please. So what do you do in an environment like this where there's so many factors kind of hitting us in the face? The whole trick as a resident is to understand this. Patients don't sue doctors that they like as much as they do doctors that they don't have much relationship with. So it's the one thing that you can really control is your bedside manner and your relationship with your patients. Most risk managers, and there are many in this field, will give you many tips. Risk managers start with, you have to document. Hopefully you've learned some of that in your training, how important, of course, that is. It's absolutely a key. However, that's defensive. And if you take anything out of my speech tonight, I want you to remember that if you really want to protect yourself and your reputation, the best thing you can do is have a stellar bedside manner and great relationships with your patients. And as we know, relationships take work. Relationships take time. They take listening. They take lots of empathy and on and on. So just remember, that's really the key to avoiding lawsuits in the malpractice world. One other tip that I like to give new doctors, we get a lot of new doctors coming out, and one of the first things we say is, well, tell us about what procedures you're going to be doing and so forth. And a lot of new doctors want to take on many patients with their new skills. And again, you're highly trained, you have tons of skills. Here's the problem from a malpractice insurance expert's viewpoint. Don't be the one that take on all the difficult patients. Refer those out to folks who have sovereign immunity, as the public centers do. If you tend to be the one to take on all the very difficult cases, you will be sued multiple times. And I can tell you, every single week in our office, we are trying to preach this to new doctors that, hey, if you have any reservations, don't just take it on, refer it out. So anyway, we wish you all the best. And I'm going to now turn it over to Tom Murphy, again, of Danna, Gracey. And we're a boutique agency. We have offices throughout Florida and are expanding into the Southeast US. We're the biggest malpractice insurance agent in the Southeast US. So we're here to help you any way we can. Tom has been in this business for many years. And I can tell you, he's just a great help to many of our clients. And so I proudly introduce Tom Murphy.
Thanks, Matt. Always appreciated, and just wanted to say a quick thank you to Dr. Baca and Deanna and the rest, and Mindy and the rest of the Palm Beach County Medical Society team for putting this together. What I'm going to speak to you all about tonight are three different other forms of insurance that are very important in addition to your medical professional liability that Matt just spoke very eloquently about. And these are just as important. I'm going to try to go through them a little quicker because there are three of them. However, I urge anybody in the meeting to contact us, and we'll have our contact information at the end of the presentation. But also you can always get it through the Medical Society as well. But we're here for you. We're here to help. So first and foremost, as you see on the screen, I'm going to talk very briefly about workers' compensation, whether you're a solo doctor or you're joining a group. It's important to think about, especially if you have your own practice. In Florida, you don't have to have it in a physician or a medical practice unless you have 4 employees or more. However, we urge our physicians to, that's where are we at, Mindy? I think we've got the wrong next slide there, but hopefully Mindy will get it corrected. So anyway, we urge you to, yeah, to look into this. I need the second slide, please. Workers' comp, you will find, is an important aspect, and many people, many physicians don't think about it when they get in practice. They think about their employees having it, but they don't think about it personally. And workers' comp is probably the most inexpensive form of insurance that you're going to find for the benefits that are provided. Being in the insurance business, and especially in the claims end of the business for a number of years, I have seen personally a number of doctors get injured during the course and scope of their practice. And so it's something to think about because it is so inexpensive. And getting back to what Jeremy was saying earlier about disability insurance, a lot of disability policies don't actually kick in until 60 or 90 days after your injury or your accident. Workers' comp will, your medical benefits are available from day one, from whenever the injury or accident occur. And then the payroll benefits come within 8 days if you're out of the practice or out of work for 8 days. So keep that in mind. It's something to discuss with your agent as you go down that road. But we always try to encourage our physicians to be included on the policy because those things can creep up on you and they can happen, and it's very inexpensive. So Mindy, have you been able to, I'm just going to go forward here because we're limited on time. So
Are you not matching?
Yeah, that's okay. Once again, workers' comp insurance right now is probably one of the only forms of professional insurance that is where the rates are decreasing. Every other form, like Matt just said, medical malpractice, cyber insurance, employer liability, even those of you who have your own homes or apartments or cars, you're starting to notice rates go up everywhere. Well, with workers' comp, it's actually going in the other direction in Florida. And there's many reasons for that, which I won't go into, but it's good news for our medical practices. So the next thing that I'll say is with workers' comp insurance, there's only two things that the premiums are based upon. One is the payroll, which is the major factor in how they determine the premiums for your workers' compensation. So they look at your gross payroll. The second thing, and the only other thing that can change the premium, are claims. If you have any claims, that factor gets taken upon a renewal. And if it's more than what your earned premium is, then your rate can increase as well. So those are the only two factors that will determine what your premium actually is. The other thing is, it's kind of a craw in everybody's side, is the audits. There are audits that are done after every policy year. Everyone has to do them. They're required by the state. They have been in the past a little cumbersome, but they're getting easier because you can do them online now. But the state requires the insurance company get those audits done so they know what your actual payroll is year after year. So that's about it for the workers' comp. And next, I'm going to move into the employment liability section. The term that you'll hear used is EPLI. It's employer liability insurance. And this is really important, especially in this day and age with social media and the Me Too movement. Everybody knows, you hear it on the news, you read it. There have been, over the past number of years, many high-profile claims. We, in our agency, have seen a number of these in medical practices. Some of them are legitimate, others are illegitimate. Regardless, they're very expensive claims to defend, employer liability claims, and they can mean a big disruption to your practice. So with employment liability claims, the examples that I give are harassment of any type, employment and wage issues, where your employee have differences in terms of how they're being paid. It can be a discrimination of any kind, age, religion, etc. And these are claims that not only can be brought against you and the practice by your employees, but they can be brought by your employees because of third parties that are coming into your office, contractors, vendors, etc. So it's really important to think about getting this type of insurance, simply because they are very expensive claims. Any defense attorney out there will tell you, just like medical malpractice claims, these are expensive claims. And a lot of times these claims will get settled for nuisance amounts, regardless of whether there's merit or not, simply because they cost the insurance companies so much to defend. And so if you don't have insurance for them, they can put you out of practice really quickly, because we've seen nuisance claims with defense going in excess of $50,000, $75,000. So something to look at and think about. One of the things that I talk about with employment liability is that we've seen, and I said this a little bit earlier, we've seen an increase, an uptick in these claims over the past 3 or 4 years because of those things that I mentioned early on. And so they are very prominent now and prevalent. And it's, other than cyber insurance, which I'm going to talk about next, these are probably next in line with regards to where we're seeing the claims after cyber and medical malpractice. So another important insurance to think about, and it's certainly, if anyone has questions about it, more specifics, Matt and I are both be happy to talk to you at any time. We're available all the time. So I'm going to move on, and I'm sorry about the slides not being there. I don't know what happened, but that's okay. The top 4 states for employment liability, of course, Florida is one of them. New York, Florida, California, and Texas are your top 4 states. And so, as you can see, they are, Florida is in the bullseye. So keep that in mind. I had a couple of case studies that were in the slides for you to see. I'm not going to go over those because they're kind of lengthy, but just know that, these 2 case studies, the bottom line with them is poor management and poorly run business or poorly run practice, where, employers were allowing employees to do and say things that should have never been allowed. The claims were filed against the employer, the practice, and there were large judgments involved. And those are just things you don't want to go down that road. You want to make sure that you've got the proper training in your office. And quite frankly, a lot of the employer liability carriers now, when you purchase the coverage, they have 24/7 hotlines that can help you answer questions, help you with the training manuals for your employees. They're very comprehensive. And that's another side of having that coverage, is you get that built-in help. Just like with your medical malpractice carrier, you've got help there 24/7, whether it's regarding risk management or claims or just patient issues, et cetera. And you really need to use those resources. They're wonderful resources that come with the coverage. So moving on, I'm going to move on at this point to the cyber insurance. This is something that needs little introduction. We see it every day in the news and in the media, the cyber claims that we've seen. There have been a couple of very large ones recently, and these cause great disruption and are very costly. And so we can't urge you enough in a medical practice that you need to have not only a good IT company that is helping you with your systems to make sure you have the proper systems that are HIPAA compliant, but also that your all of your data is backed up, your patient healthcare information is backed up properly, and that you're doing the right things to protect that data. As you've probably heard in the past, and Matt and I have said this many times, medical health information is the #1 sought after information on the dark web and by cyber criminals, because for the single reason they can get, it warrants a lot of money in the black market. So at the end of the day, you really need to keep that in mind and know that they're out there, and it's not a matter of if, but when. We have one of the companies we work with has a saying that couldn't be any more true, and that is, if you're 99% protected, you're 100% vulnerable. And so have a good IT company, reputable, by word of mouth, somebody else that you can, unless you know somebody personally, get them involved, and then find an expert, whether it's our agency or somebody that you know already, and find a good company that not only provides the coverage that you will need, but also provides the support. A lot of the insurance out there just provide insurance for when you get hacked or when you have ransomware. And that's after the fact. It's great to have because it's helpful, but you want somebody there that's a partner that's supporting you before that to make sure your systems are safe as they can be, and also that they're working with you to update those systems and keep you informed of things that you will need moving forward. And so with cyber insurance, moving on here, sorry about that. There, one of the tools, and I'll try to get through this quickly because I know we're running low on time, but one of the tools that we use when working with our clients is, and the cyber companies will tell you this, is using multi-factor tools. The most important, you probably have them already or have seen them with banks or your financial institutions, having a double password or a double way to get into the system. Typically, that's going to be almost the best thing that you can have moving forward with any system that you use, whether it's in your office or out of the office, and you're accessing mobily, which, as we all know, everyone is doing today. So, once again, training, very important with your staff. It's really important to train your staff about cyber and what they're doing on their computers and how to be careful and what to watch for, because a large portion of cyber breaches, ransomware, et cetera, they happen because someone mistakenly opened up an email they shouldn't have opened up or an enclosure. And it's really simple stuff, but that's how it happens. And so there's ways on the internet and there's free ways out there that we can help you with to phish your employees, to actually send emails that are test emails to your employees, your staff, et cetera, to see if they're opening emails they shouldn't be opening, and to support that training, as we were talking about earlier. And so really important stuff. I'll end with a real story, or a couple of real stories here. We've had a number of practices, medical practices in Florida, that have had cyber issues over the past couple of years. And one of them involved ransomware to a group of ours that actually happened over a 2-week period where 2 separate ransomware attacks occurred. Now, obviously their system was breached, there was money demanded, et cetera. And fortunately for this particular group, a couple of weeks before all of this happened, they were smart enough to listen to Matt Gracey and purchase this coverage. They had a claim. It wound up costing approximately $130,000. Of that $130,000, about $127,000 of it was paid by the insurance company. And they were paying a premium of probably $4,000 or $5,000. Matt, you can correct me on this, but probably $4,000 or $5,000 for the cyber insurance. So they were very, very happy. The administrator, the doctors were very happy they had it. We've had other groups that have also experienced patient health information being put on the internet, being stolen, et cetera. And fortunately, these groups, once again, had the coverage in place. They had the resources that helped them and stood behind them to take care of this. And so it's really important to think about this. It's an up and coming nightmare is the only word I like to use, because it really is. And we're all exposed and vulnerable, and we need to take steps to prevent that. So I want to thank you all for taking the time out, your busy schedules, for listening to us. Once again, I urge you all to contact myself or Matt at any time. We're available 24/7. And you can reach us. I'll put up, unfortunately, Mindy doesn't have the information, so I'm going to read it off to you. It's you can reach us at our website, www.dannagracey.com, and that's DANNA-Gracey, but there's no hyphen, DANNAGRACEY. And then our phone number is 800-966-2120. So feel free to reach out to us, and we'll try to answer any questions we can. Thanks again, and I'll turn it over to Dr. Baca.
Okay, thank you. Those are very good and succinct. Basically, just a couple of comments. I actually bought my disability and my life insurance when I was a resident. And right now I'm paying $120 a month for a disability policy. The earlier you buy it, the better it is. And unfortunately, I've never had to use it, and I'm glad that I haven't, but it's been very important. We're buying our insurance for the practice from Matt. And we're very pleased that we're doing that, and we've actually saved a fair amount of money. And what's important is that they do offer you services in terms of helping you with risk management stuff. And I have a question for Tom about the cybersecurity. Now, we're pretty careful at our office, but we have certain policies in place. Like, you're actually not allowed to open personal email at the office. We have a separate Wi-Fi that's separate from the system, that's only for guest Wi-Fi that they can use for their cell phones, and they can only open up their emails on their cell phones. And we don't normally do any emails for the practice, because technically emails are not HIPAA compliant. I know a lot of practices are doing it, but actually only faxes are actually allowed right now. With the pandemic, I know that they've kind of reduce that, but there's something called high tech, which you guys are supposed to respond to. And, we have to be really careful with that kind of stuff. But, anytime you do any kind of email stuff, you're really in trouble. So if you follow the high tech rules, you're probably a lot safer. So if you have a ransomware attack, what do they actually do? I mean, do they clean up your computer, or do they pay the ransomware, or do they trace these guys down and send Mr. T after them? How do they solve the problem?
Well, Dr. Baca, unfortunately, there's no direct answer to that, because it's a case-by-case situation. And so we've seen instances where they did not pay the ransom because everything, the penetration that happened was not sufficient enough for the practice to be concerned about the dissemination of patient health information, and they had their information backed up properly and quickly enough so that they were up and running within 24 to 48 hours. There have been other instances where the carriers have paid ransom when there have been very sticky situations where there's been patient health information that's been compromised and been threatened to be disseminated to either the black market or out on the internet, or both. And so it really depends on the situation, and it's a case-by-case thing. Once again, that really takes us back, Dr. Baca, to what I was saying, and that is, it's really important to have a good partner and carrier that can walk you through these things. Because if you don't have this coverage in place, you don't have all of those resources, and you're scrambling to find out what you need to do, how you need to get. The first thing anybody does is go to their IT company, and their IT company can only do so much. They don't have the ability, they don't have the lawyers, they don't have the forensics, they don't have the ability to jump in with a team and get you going in the right direction like a good partner does. And so really important. I'm glad that your group has it. Use their resources, get them to help you with phishing your employees. I'm glad to hear that you have separate emails. That right there alone is, half the battle, is employees not being able to use their own emails. The other thing is, employees, use the internet. They surf the internet in practices and businesses everywhere. They just do it. And it can happen there as well. So it's not just emails, it's other things as well. So it's a comprehensive thing, but it's a moving target. So it's really important to have a great partner.
Yeah. Okay, so we're going to open up to questions. We can either do chat, or it's probably easier just to unmute your microphone and just add to the conversation.
One thing I might add to the cyber conversation is one thing that's very important to remember is anytime a medical office with patient records has a breach, it is a HIPAA violation. And folks tend to forget that. It's not taken lightly by the government, particularly if practices don't report a breach into the patient records. So again, very, very important to remember how important it is to keep everything secure. We even had a case a year ago where it was a doctor going from one of his offices to another office and left some patient records on the top of his car as he was juggling his coffee and so forth. And the administrator had a call from just some stray guy on the street who said, you know, I think you might want to come over and get some of this paperwork that's flying around. Again, a major HIPAA violation that is just one of those bad situations.
Yeah, well, that's another, I mean, there are a lot of safety things. Like, we don't allow paper to leave the office. I mean, generally paper gets scanned in eventually and gets shredded, but sometimes doctors want to take records home. We don't allow that. In terms of remote access, I know that's a problem, but we don't have remote access to our network. We only have remote access to the EMR, which is on an off campus and is on a server somewhere else. And, we're very careful about that. But I would suspect that probably a large number of your breaches are employees, because you can hire somebody who's basically actually going to get hired specifically to get into your EMR and start stealing data, because they can see sometimes credit card numbers, definitely social security numbers, all the things that steal people's identities. Right. So you have to be really careful who you hire, and you got to take the time and do your background checks and all that good stuff.
Absolutely.
Any words of wisdom, Jeremy?
We deal with a lot of PHI and HIPAA related information, and it's one of the biggest concerns we have. As doctors run businesses, you have to deal with things that you never learned in medical school. Like if you're going to be a hand surgeon, you're going to learn everything about the hand and everything, and then you have to own a business. And there's all these different things that you never even thought of. And one of the biggest things is CYA. And these kinds of insurances that Matt and Tom are talking about, 100% is protecting your biggest asset, which is your business, right? You can have other professionals working for you, Dr. Baca, but if your business goes down, it's done. You can't recover from something like that. So these business-related insurances are just so valuable, and they're not that expensive related to what they're protecting. It's less than 1% generally when you build these numbers in of revenue. So if you're only taking 1-2% of revenue to protect it, that's a huge advantage versus 10% of revenue or 20% of revenue, where some expenses can be.
Well, a death in the practice also is something, and I know personally as someone who didn't have insurance, and the wife came and said, you owe me X number of dollars, and they never insured each other. Like I know in our practice, we insure each other.
Yeah, buy-sell agreements, yeah.
And if you have any physical assets, especially building and stuff, it can become a sticky wicket. And they ended up having to go into debt in order to pay, that which, would have cost them pennies on the dollars. You know, it's a sad case because, you know, the individual got cancer, but, you know, you just don't know. And
And also in the South Florida, at least, generally for small businesses, there's a large age gap between partners. Generally, there's an older and a younger coming in. So if you're not ensuring the difference, if that older person dies, the spouse cannot own a medical practice. They need to have the proper degrees in order to own a practice. So that spouse is left out in the cold if there's no insurance or something to offset the partner dying.
well, yeah, they can't own the practice, but, you know, they potentially can own the assets or the portion of the assets.
If there are assets.
Right. Now, a lot of practices don't, but my hint of the day, guys, is that McDonald's didn't make money off of hamburgers. They made off of real estate. And we own every piece of property that we work out of. And that's a nice little annuity at the end of your practicing life, because, you know, you basically depreciate the property and then 30 years later you own it, and then it's double in value from what you paid for it. And you would have paid rent anyway. And my rent right now is $4,000 a month for 5,000 square feet in Boca, which would probably cost about $15,000 to $20,000 a month.
Well, the only thing I'd argue with that, Dr. Baca, is about the doubling part, because over 30 years in South Florida,
Could be triple.
it's been a lot more than double.
Yeah. Yeah.
Yeah. But no, you're 100% right. It's one of the great advantages of owning real estate here in a business.
Right. Okay. Well, I don't guess there are any other practices. I hope this was useful for everybody. I appreciate everybody. I learned something, so it's good for me too. And be good and have a good night. Thank you.
Thank you.
For coming, everyone.
Thank you, everyone.
Bye.
Thanks, everybody. Have a nice evening.
Bye.
Thanks.